What is up, everybody? Logan here coming at you guys with another video. And today I'm going to teach you guys how to use Options AI. Now, Options AI is a stock trading platform that focuses on like multi-legged and risk-defined option strategies. They actually reached out to me to do this video, and I've actually really liked the platform and plan on using it in the future. So it's really interesting though, out of the gate. There's a lot of cool things that this platform offers, especially when it comes to, like I said, multi-legged options, and I'll go into kind of modeling the trades in a little bit. A couple things I want to share right when we get into this is if you guys ever are curious, Robinhood, if you take a look at like their options order flow, most retail traders and retail investors, when it comes to messing with options, 99% of all of their options order flow is single-legged options. So naked calls, naked puts. And if you're going to sit there and trade naked calls and naked puts for a long time, you're going to find out that it's very unlikely that you can do that sustainably. But then when you get into the options market of trading, put credit spreads or credit put spreads, call debits, trading all these risk-defined condors, butterflies, everything that my channel is pretty much focused on for the last couple of years, you really sit and find out, hey, trading is much more consistent this way. Plus, I understand my probabilities. I understand my risk in the trade. And it really helps your emotional management. Look at today, right? I mean, this is a massive FOMO day on SPY. Everybody and their mom wants to buy into calls when the market's up 1.3%, right? That's just intuitively, like, we see green, we want to buy. Now, that's one cool thing about this platform is if you go to make a trade, right, you really want to focus on utilizing how awesome their tools are for what you should expect and how to manage your expectations. So for example, right, we have SPY pulled up here. I did paper trade and put this debit call spread on yesterday, just messing around with the platform, feeling it out a little bit, but you can see your percent gain on all your trades down in your portfolio tab. You can come down to the watch list. You can edit this watch list and add any stock that you want, like Apple, right? We have earnings today for Apple. So I have SPY and Apple on my watch list. Click the back arrow. We scroll down. Here's Apple. Here's SPY. And then those update and you have a watch list now, right? The market is up a decent amount today. The other thing I like about this platform is if you're not sure how to trade specific things, like spreads, like why should I trade them, right? Bull put spreads. Anything like that, there's a video series down here that they uploaded 126 days ago that you can take a deep dive into. So like, for example, we could watch the Condors video really quickly. You guys could get a good understanding of it based on how to utilize it on their site as well. And they give you a video summary if you also don't have the time to like fully watch it. And then there's also a bunch of other reads on, butterflies, condors. So we'll just take a quick watch on this.
In the prior video, we went over the similarities between an iron condor and an iron butterfly. Both trades combine a credit call spread with a credit put spread to create a range or zone of profitability. Now let's look more closely at examples of both, how they differ, and how we might use them. As an example, we open an iron condor by selling a $1 wide out of the money credit call spread at 25 cents, which on its own would be risking 75 cents. But we simultaneously sell a $1 wide out of the money credit put spread at 25 cents. In real life conditions, the two prices might differ, but the net credit is the important figure here. Combined, we receive a net 50-cent credit from selling the two spreads. Since the width of each spread is $1, the net risk of the trade is the risk of one side of the spread minus the net credit received from both spreads. Why is that? If this trade is max loss at expiry, it can only be because one of the spreads is completely in the money. The other would be out of the money and worthless. The stock can't be in two places at once on expiration. Therefore, the risk of this spread is 50 cents, not $1.50. A note, if the two spreads are different widths, the net risk is calculated based upon the wider of the two spreads. Once again, if the stock finishes between both spreads expire worthless for the max gain equal to the credit received.
Sweet. So that gives you guys a good like little 2 minute gist if you were unsure of how an iron condor was traded, right? And they have this whole video series for you guys to learn as well, which is very helpful. One other thing they do promote down here, as you can see, they do like this weekly newsletter on what to look out for the week. And I actually do read these every week. I have been for the past few weeks as I've seen Options AI pop up a little bit from In the Money Adam. And yeah, it's just really helpful. The other thing that's really cool, and I think a really good sticking point with this platform, is the commissions and fee structure. You don't have any commissions when you purchase stock. And then no matter any size on your contracts for single leg options, if you are to buy a naked call or put, or multi-leg options, no matter how many contracts you trade, it's just $5. So that can really help you save money if you're on a platform like Tasty or Thinkorswim and you want to trade SPY, but you find yourself always paying a bunch in commissions because maybe you're trading 20 contracts or 30 or 50. And you can go through all their actual fees here, right? Their margin rates on like debited balances. Your transfer fees are all down here as well. So you guys can take a really solid look and see if this would fit your trading style when it comes to the commissions and fees, because that's one of the biggest sticking points for me is even with my fees reduced, right? Personally, if I can get those reduced even more, I would like to do that. So that's one other thing I wanted to show you guys really quickly, but let's hop into actually executing a trade. I did show you guys, we do actually have my recent searches. You can just search anything you want to trade from here. But if we did go to SPY and we take a look, now, like I said, I had this paper trade that I put on yesterday. Oh, and one thing I do want to mention, if you guys are signing up for accounts, so if you go to Options AI and you click down here, you click over to get started, you can see a subscribe over here, and that's for, you know, your trade standards, advanced options, earning moves, right? You get everything that I just showed you. It's $19 a month after a 10-day free trial. You do get $3 off if you use commission code Logan. And then same with when you're applying for a brokerage over here. If you go to the code, I do get an affiliate thing. So I would really appreciate that if you guys do end up following. But if we go to SPY, right, I have this debit call spread. Let's say now that the market's up 1.32%, right? If you wanted to get bearish because you say, wow, the market's just moved, right? Like on January 19th, we were 387, right? And we're February 2nd today. So if you're like, this move's gone up too much, they show you what's expected for the next few days, right? 7 days out. This is just the expected move, visualizing it with the IV rank around 17% in general. So, right, because we have the volatility has dropped tremendously with this massive move up. You can also unclick the expected move if you don't want that as part of your trading strategy, but it's right up my alley, right? I love using the expected move. You can come down, you can actually see the open interest. You can see the options volume, which is very helpful on SPY. You can see the most active open contract, like options contracts. So everything that's being messed with today, there seems to be 413 puts, a lot of calls today, expiring today. I'm not sure if those will get paid out depending on where they are. But if you are bearish, right, and we click bearish, you have this little graph that pops up. And let's say we're bearish, but we actually want to do a credit call spread or a call credit spread, as you guys may be familiar with. So essentially, right, what we're doing here is we're selling a contract. We're going to look at our expiration, which you can toggle down here. And you guys know I'm a short-term trader. Like, I don't like to trade things over 11 days to expiration. That's just me. So let's say 7 days out, right? So we're going to change the expiration to that. And it's going to give you this little model of what if you actually took this trade. It shows you the probability of profit down here. Your max risk on this current trade of 822, your max gain to 378. Well, let's say you don't like that spread. You want something with a little bit higher probability of profit. Well, you'd actually just move this little leg further up, right? And as we do this, we shrink the spread width in general. And at the same time, look, your probability to profit is 75%. Now your max gains have gone down, but so have your max risk because you've shrank exactly like the specific spread that you wanted to do today. So let's say we're happy with 421. You just have this idea that in the next 7 days, we're not going to be above 421, right? Taking a look at your, we got news, we got fund info. Yeah, but we come down to the options data and you say, okay, This is a pretty good idea. I got some other technical analysis I've been working with. Let's go review that trade, and you can change the size if you'd like as well of how many contracts. So we go to review the trade. So now what you're able to do here is if we were taking a look at this trade, right, we mentioned that credit, right? What was our max gain? Now the market has actually pulled back a little bit. So our credit has fallen to about $1.50 from about that $1.54 spot. You can adjust your contracts here. Let's say you don't just want one, you want to get 10, or you can get 5. And you can see as the market continues to fall, so does your actual limit, right? So you can adjust this and try to get filled based on what you think you should get filled at, right? And what you find your risk to be. But it says right here with 5 contracts, I'm risking $2,770 to make 730 on a 7-wide spread. So like, okay, that looks good. Let's save this trade. Click save trade. And now as you guys can see, I have a debit call spread and a credit call spread. And this expires in 13 days and this expires in 7 days. And this is going to help me see my profit and P&L on this trade, right? Now, granted, these are paper trades, like I said earlier, on the specific account they gave me for this video. I do plan on trading with them, though. I would love to start a small account challenge through this and see how some risk-defined SPY strategies can cushion your account really well and, show you guys other things you can do that aren't just buy naked calls and puts, and to utilize a different platform that charges virtually no fees. So that's where you would see your trade, right? And then if you want to come in and close this out, right? Like let's say you put it on and then immediately your whole thesis changed and you're like, oh gosh, we might go up to 420 or 422, right? Come down here and you can just click delete position. Now it does look different if you're not on a paper account, but if you're like, I don't want this anymore, boom, you just delete position and then it gets taken out of your account. So we do have the option scanners too, which is fun. If you guys are into stocks that have, unusual options volume. I know a couple guys who trade specifically off the volume of these stocks. And like you can see Desktop Metal is up 13.7% today. And look at the volume up and some of these percent gainers. Same with the other side, right? If stocks are to lose 20% of their value, you're going to see the put side move tremendously if people are getting into naked puts to short the move. So that's really cool too. You can use these little scanners. I like to just come down here. I'm a big fan of the oversold RSI. That's one way I trade like bullish credit spreads, is just looking at oversold RSI. And then if I bet if we go to overbought RSI, you're going to see a massive amount of stocks. Carvana, look at this, just a decent chunk of stocks with RSI, it says 100 right now, which is pretty nuts, honestly, if you ask me. So we'll see. I mean, there's a lot of FOMO going around in the markets. This is your positions tab, right? This would show if I kept that call credit spread on the actual trade, which is really cool. And then this is the actual debit call spread I have on as of now. So that's everything I wanted to show you guys with Options AI. You guys can take a look at this week's earnings, next week's earnings. We got the big boys today. So that's everything I wanted to show you guys with Options AI. We can also model another trade, maybe on Apple, for example. And one of my favorite things about this platform is just the expected move chart. And you guys are going to see, right? They have earnings coming out. So they're basically pricing in $155 to the upside and $144 to the downside based on Apple's earnings. Now, granted, it depends on how much FOMO we receive. I would like to think Apple's going to drop and kind of hang out around its mean, but it may get very extended. And then I can also look at starting a short position above it based on the actual information around earnings. You guys can see down here on the earnings tab, take a quick look. That actually down here, you guys can see the prior moves with earnings over the last 3 reports. So this is another very helpful way to take a look and say, okay, what has Apple done the last few earnings? You can say maybe you're neutral on it and you want to trade a condor. You can do an iron condor and adjust the strikes, hit review trade, and go through the process again. But that's going to be everything for me in this video. I really hope this shows you guys how to utilize Options AI. This is one of my favorite platforms, and I'm going to start trading with it a little bit more here and there, just because it's cool and something I'd love to learn, because I really only want to trade for the rest of my life. Risk-defined options, just because the probabilities are in your favor, and the better you get at something, the better your performance is over time. So like I said, use code Logan when you guys sign up, and you will get a discount. You can find the link down below in the description, but that's going to be everything for me, and I will see you guys in the next video.